We go, yeah. Hello, Borja. Hello, Luca. Very glad to be here as always. Well, life is beautiful on a Bitcoin standard as always. We've been very busy those
Mm-hmm.
last few weeks and especially those last few days slash hours, in fact. So we announced this morning, and we are very proud to have announced a private placement that we realized with the major US banks and investors, including the strategic investors that we had, Adam and Tobam, on a
Mm-hmm.
warrant-based subscription, which we may explicit in this conversation. But yeah, we keep digging and we keep building the bridge towards more BTC.
Amazing, amazing. So please share to the audience here, Valen, a little bit the details. How is it that
Yeah.
Capital B continues to stack Bitcoin?
So that's funny because we had this conversation a few weeks back, talking about what are the ways to
Mm-hmm.
aggressively accumulate digital capital,
Yeah.
having convexity with
Mm-hmm.
aligning this with the objective of increasing number of Bitcoin per share. And in fact, there are not many solutions. And one of them is obviously the convexity through options.
Mm-hmm.
One of the ways that we found was the MNAV dynamic 1.1 MNAV dynamic warrants that we issued with Adam, with Tobam, with UTXO management a few weeks back, which was obviously very important for us to scale and to give a clear trajectory towards enhanced balance sheet and more digital capital. But one of the ways that you try to engineer this product right now is a product that is scalable for institutional capital. And in
Mm-hmm.
fact, not many issuers have access to digital capital and to digital capital markets through institutional partners. And so we try to
Mm-hmm.
engineer this in a way that obviously big institutional capital can come in,
Mm-hmm.
big capital that is maybe today underexposed to Bitcoin Treasury companies. And
Mm-hmm.
I want the optionality and I want to monetize this optionality that Capital B has, a strong, strong volatility between 80 to 110% those last 30 days, with this objective of having more Bitcoin per share over time. And so we try to engineer this in such a way that this is an equity issuance with warrants attached for 15 million that we realized with four tranches of warrants attached, each having, steps, so 30% premium over the previous tranche, which are 5 years in maturity. But the very interesting thing that, I mean, has never been done before in the digital capital and the Bitcoin treasury landscape
Mm-hmm.
is the ability to trigger an accelerated exercise uh, period, in which case, whether the investors are deeply in the money, we have, as a company, the possibility to accelerate the maturity and, in fact, to power fuel the rocket as soon as the investors are deeply in the money. And so this does two things. This does that beyond the 15 million original subscription, we have a 99 million euros potential in terms of capital raise in the very short term. We have the possibility to trigger that through the mechanism and the clear engineering that we had. And when we trigger that, we have the possibility to do so in a way that increases Bitcoin per share because the trigger is not done at levels that are below MNAV1, or at least that minimize this risk. And so this
Mm-hmm.
gives obviously the scalability, institutional scalability, because you have fixed terms, because you have, classical warrants that are, that institutions are craving actually, and US and European institutions are craving
Mm-hmm.
for institutional capital and traditional capital, but power fueled are the Bitcoin standard. So, again, Borja and Luca, I said at the very end of our last conversation that you had to get rid of limitations and not ask yourselves if it is possible or not, or to what extent, but how, and dig deep and execute. And this is what we did. and this is what we will keep doing. So this is a clear signal that we are sending to the market, obviously, and we are relentlessly working for more Bitcoin per share.
Amazing. No, thank you so much, Valen. And Valen, how are you seeing Bitcoin right now? How are you seeing Bitcoin's strength? Any context or summary or whatever that we can give to our audience about Bitcoin Vegas and so on?
Yeah, so two parts of to answer your question on BTC, obviously I can see the consolidation now up more than 15% since beginning of April. One of the things that I would note is one, this is a remark I already made when we talked about the bear market a few months back, but now we are seeing it materialize, is that in fact one should be very uh, agreeably surprised that the bottom was only minus 50% with comparison to previous
Mhm.
bottoms at around minus 75 to minus 85%. Obviously, this can go lower. Obviously, we can have new lows, but what we can do is a capital formation around this price points, which is very important and very interesting. And one of the ways that we can explain that is, in fact, big whales and big institutions that were BTC holders
Mhm.
may have been selling Bitcoin to position in financialized Bitcoin. In fact, to position in traditional finance products, whether they are leveraged options, whether they are Bitcoin Treasury companies, whether they are structured products that are not only pegged to Bitcoin but that are in fact leveraged bets on Bitcoin and reposition the capital for when obviously the Godzilla candle will come in. And so we can see that now this capital formation it has formed, and we can surely see this stabilization of the price that indicates that not only institutions are positioning, but in
Mhm.
fact they are positioning in size, and so that's very encouraging for the next few months. I would be quite cautious in the ways Bitcoin can behave for the next few months, because obviously we have the geopolitical environment that does not help global liquidity and so on. And we know that to some extent BTC is linked to global liquidity, but this
What
is
are
also the
you
case.
sorry, what are you
Yeah.
seeing there, Valen? What are you seeing in the short term?
So in the short term, what I can see is more institutions disclosing their plans to build digital credit-backed products and digital capital-backed products. I mean, we saw Morgan Stanley, we saw Vanguard lately announcing some structured products. And what I
Mm-hmm.
can hope is obviously European institutions coming into the game.
Mm-hmm.
Obviously, I can also see in the very short term more and more actors coming also with products built on top of digital credit, not only giving access to those products to their investors. That's what we saw with the 21 shares, for example, in wider term, but also structured products on digital capital and digital credit.
Mm-hmm.
And this is the case, in fact, for BTC doing 2, 3, 4x in this cycle. It's, I mean, as I said, one of the models that I like very much is the model from Giovanni Santostasi, the power law, to say that Bitcoin may not be an asset, but in fact may be a network disguising behind an asset. And so when you see the network effect and the value of the network, well, the case for exponential increase in value of the network is digital credit. And I encourage every institution today to put all their efforts towards distribution of digital credit at scale, because this is now that they have to act.
Amazing. And Valen, please tell us, as digital credit continues to grow, what is the next step for digital credit in
Mhm.
your opinion? Huh?
So, as we began to mention that in the last conversation that we had.
Yeah.
I again strongly believe that the next step that still needs to crack digital credit is distribution.
Mm-hmm.
Not distribution in terms of type of investors, because we know that STRC, for example, is held by 60 to 70% of retail investors, which is, I mean, just imagine this is huge, considering a product type preferred equity, which is, I mean, mostly an institutional type investment. So, I mean, this in itself shows the power of digital credit, shows that people understand what digital credit is about, what is the value proposition, and so on. But I would go beyond that. 70% of retail is holding SCRC, yes, but in fact, less than 0.1% of global retail population has even a clue of what SCRC is. And so you can see the enormous potential that digital credit has to reach, I mean, traditional investors, retail and institutional investors that are afraid of the volatility of Bitcoin, that want to grasp part of the Bitcoin average rate of return
Mm-hmm.
of 20 to 30% every year, and that do not want the volatility of Bitcoin. And so, I mean, digital credit, I mean, is engineered to do so, to have a volatility of less than 2-3% lately, and to give a return that is constantly powered by BTC with a credit rating that is 10 to 15 times better than what can propose the Max 7. So it's not a matter of value proposition because digital credit is superior, is in so many levels, but it's a matter of digital credit getting into the hands and in front of the eyes of global retail and global institutions that are in fact craving those type of returns. In Europe, if you have this type of return with 2-3%, I mean that's the best that they can do. And so you are proposing, in fact, a product that is 3 to 4 times more
Better, yeah.
efficient, that has a strong credit rating, and furthermore, for which the traditional credit rating agencies might reconsider in the light of what Saylor said. What Michael said is not due to hazard. It's due to the fact that S&P and Standard and Poor's and all rating agencies have very precise rating criteria, including the ability to leverage assets to pay dividends. And what Michael just said is, yes, we can at times use the assets to pay dividends. And so this changes the game completely because what was in fact theoretical, obviously every analyst in the industry knew that the ability of strategy and of digital credit issuers to pay their dividends were more than 50 years in theory. But
Yeah.
now it's entering into practice and into measurable practice from traditional rating agencies. So this changes everything.
Yeah. And what feedback do you expect from from the S&Ps of the world and so on? Like you expect the credit ratings for Stretch and the likes to improve. What do you think about the message to the market? Like, let's decompose this topic, which is definitely very, very interesting and very talked about now.
Yeah, so again, by design, it's not a design, it's not a bug, it's by design.
Mm-hmm.
Institutions are slow. They
Yeah.
are slow to take decisions. They are slow in their process. They are slow in the ways that they see things. For example, BlackRock recommends today to their uh, to their advisor to allocate their clients' funds 2 to 3% to BTC, which is, I mean, dramatically not the case today. So, I mean, even at the time that the decision is taken, there is a lag towards the time where it's applied. So, I would say that one of the big challenges that those institutions have is obviously getting in the way of not only positioning but executing on this positioning. So what I would expect is those institutions that have been leading in the space, and I include the obviously digital credit ETFs, BlackRock being one of the pioneers in this space, Vanguard, Morgan Stanley, and so on and so forth, being increasingly aggressive in the way that they shorten then their decision-making process, and they get in front of traditional institutional investors to allocate, in fact, to digital capital, so to BTC, and to digital credit. Now, when you focus on credit agencies, because you talked about the next steps for S&P and so on and so forth, In fact, when you dig deep in the decision for S&P, they are quite clear in what they want to see from strategy, and this includes the ability to leverage their assets and to show that their assets can be used. And again, this is the clear message that Michael sent to the market. It's not a matter of, I mean, ideology. It's a matter of maths. It's a matter of how you accumulate capital and how your net position increases over time. And what is very important and what is often forgotten is that MSTR's ATM is in fact bound to the volumes. And so if MSTR is included into the S&P 500, while the volumes might skyrocket by orders of magnitude. And so this would mean obviously more Bitcoin per share for strategy and more capacity to issue digital capital and digital credit instruments. So not only those requirements from the S&P are in fact being checked one by one by strategy, but it's also done in a methodical way so that the market recognizes that digital credit issuers, in fact, the US, European, Asian, and I mean the leading digital credit issuers, whether they are present or future, obviously, that will have understood the functioning of digital credit, the value proposition, and the investor profile to which those must be distributed, will, I mean, evolve in orders of magnitude with those institutions being behind.
Valen, I have a question there. Like, what would you say is capping right now? I mean, growth has been unbelievable. Don't
Yeah.
misunderstand. But what I mean is, what would you think is capping like a 10x digital credit right now, for example, for Stretch? Like, would you say it's the absorption of volume, or would you say it's distribution, or a better product? Like, what would you say it's?
Well, so answering the last first, there is no second best product than digital credits. Digital credit is the single best value proposition that the world needs right now, and the single best value proposition for the general public to adopt Bitcoin, either directly or indirectly. I mean, I care about the network. I care about BTC, the assets, but I care about BTC, the network, how it is adopted, and how Bitcoin Treasury companies participate to this mass adoption. And digital credit is, without the shade of a doubt, the best way, the best rail of mass adoption for Bitcoin over the next 10 years.
Mhm.
So when you understand that, you understand that obviously the single very best value proposition is digital credit. And I understand, Luca, the impatience of saying, what is the cap for the next 10x, 20x, 30x? Well, let's take a step back. STRC, less than 1 year ago, did not exist at all.
Yeah.
And
It's insane.
went from zero to being a $9 billion instrument, which is, I mean, never
Yeah.
seen in traditional finance. But the case for 10x is in fact the distribution and the adoption by the mass general public. It's not the institutions. Institutions are coming anyway. Institutions understand we have in fact, the discussions at BTC Vegas and so on and so forth are centered around digital credit. So I can tell you that institutions understand the value proposition and are creating those kind of products
Hmm.
and need the time to defend this to their management. But I can see, in fact, in the same way that there was a risk, a career risk for CFOs and so on to discuss about BTC that shifted. Well, in fact, I can imagine a future in which in 3 to 5 years, it will be a career risk for CFOs of modern corporations to not discuss and not plan the inclusion of BTC and or digital credit within every single corporation's balance sheet.
Yeah.
And this is the thesis for 10, 20, 30x digital credit, obviously. Again, when you talk about the potential for BTC in the following 10, 20, 30 years, I always talk about obviously the power law, but not only the power law because I love maths, but the case made by Halfine, which I respect, for which I have the utmost respect, that gave very early the target of 200 trillion in BTC addressable market. And when we talk about BTC addressable market, we do not talk about BTC-backed credit instrument addressable market. And when you look at traditional finance, in fact, credit-backed assets are 10 to 20x the value of the underlying asset. So you can imagine that the potential for digital credit is in the hundreds of trillions. And we are working every day at Capital B to be one of the main actors in this area.
Valen, how do you see? We've talked we talked a little bit about it with you. We talked with the other guests. How do you see Bitcoin performing like in the next 2 months of this quarter? We're closing the quarter in June, 1.5 months to go, something like 6, 7 weeks. Again, you were talking about the macro today. We talked a little bit about this, but would love to hear like your expectations. Yeah.
My expectation, Borja, is to keep buying BTC cheap, and
Mhm.
every single BTC that I can buy below gold parity is a crazy discount. So right now, Capital B is in fact buying BTC at a 90% discount to gold. So
Mhm.
we are obviously focused on increasing Bitcoin per share, but also realizing the opportunity of creating and accumulating a war chest of
Mhm.
BTC, and not only to increase Bitcoin per share, but also to obviously be the very best issuer of the very best products in Europe. And so, I mean, I have no crystal ball, and I will not make price predictions right now.
Mhm.
This again, I said at the very beginning that this could go sideways in the next 2 months. Obviously, this is interesting to monitor, but what I can see as well is the decompression of Bitcoin Treasury Company's MNAVs.
Yeah.
I think that it is very important to monitor because it gives, I mean, Bitcoin Treasury companies have always been a leveraged bet and a risk on, and in fact, an
Mhm.
anticipation bet
Yeah.
from institutions on future Bitcoin appreciation. And so what you can see, in fact, from analysis on decompression of MNAs throughout the industry, from US, you talked about MSTR, Strive, Metaplanet also that is strongly decompressing the MNAV premium, and obviously Capital B that has maintained a premium above 1 MNAV throughout the strategy. Well, you can see that in fact risk-on assets are becoming again a very strong choice for institutional investors, and you can obviously anticipate that this is a leverage bet on future Bitcoin amplification and future Bitcoin appreciation. So I would not say what is my conviction. I follow maths, I follow the power law, I follow things that are measurable, that are within my control. What is within my control is to work every days and nights, literally, to acquire the most BTC possible, the fastest way possible, and in the most accretive way possible for our shareholders. And this is my job at Capital B. This is my focus. This is my obsession. This is my life. And again, what matters is every single BTC that I can acquire below gold parity is a bargain. So count on Capital B to be one of the most aggressive accumulators over the next 10, 20, 30, and 50 years.
Yeah. No, this is great. And so, Valen, as we get to the final part of our segment today with you, and as we have 800 people watching, roughly, any final comments, any final remarks, any final anything you would like to share to everybody who's listening?
Well, I said in our last conversation together that we see builders that build in bears. Well, I think that what will differentiate real builders is the ability to build bridges towards more digital capital and towards a crystal clear, well-balanced, protective, and aggressive balance sheet in terms of digital credit and digital capital in the light of digital capital markets. And this is the main focus that we have at Capital B, to have the most pristine balance sheet possible, to have the most aggressive accumulation as possible in the way that is the most reasonable, the most analytical, the most math-based, and the most well-engineered. And I insist in the term engineer. Now, this is part of what I said at the very beginning of the latest issues that we had. Engineering and the details of engineering is of utmost importance in building bridges towards more digital capital. And we are working every single day to be the most efficient bridge builders in Europe.
Amazing. Thank you so much, Valen, for being with us as always, and looking forward to seeing you next time.
Yeah, thank you, Borja. Thank you, Luca. Bye-bye.
Bye,
Thank you.
Valen. Thank you very much.
Bye, Valen. All right, guys. So this was our final guest of the day. Before